3 property investing strategies which are absolutely dead in the water in 2024. Now you're going to want to watch this video, particularly if you're a new investor, you're beginning or starting out in property, because you can easily be searching around on YouTube for how to get started in property and what to do, and come up with a video that's 2, 3, 4 years old. And that may be talking about 3 of these strategies that I'm going to share with you in this video. But you know what? There's a time and a place for every property investing strategy. All these strategies that I'm going to talk about in this video worked in the years gone by. All of these strategies I've personally done and profited from in years gone by. But what we've got to look at going forward is where we are in the property market cycle and what strategies are appropriate going forward from now. Now, in a video that I'm putting out in the next week or so, I'll be covering strategies that will work and will work a treat in 2024. So when we upload that video, make sure you've subscribed to this channel and hit the bell icon so you're notified as soon as that video is uploaded. So let's dive into it then. 3 strategies which definitely won't work in 2024. Now, I've been doing property for the last 30 years, and as I said before, all these strategies have worked at various times in the past. But if you're starting out or looking at doing something in 2024, these are the ones to avoid. The first one is vanilla buy to let. Vanilla buy to let is most certainly dead. What do I mean by vanilla buy to let? This is when you simply buy a property at pretty much market value. You don't do any works to it and you pretty much rent it out on day one. In most areas of the country, this will simply not stack up. Now, it will stack up in some real hellholes of the country up north and all the rest of it, where property values are relatively low. Now, the thing with these sort of properties is that capital appreciation and long-term appreciation is relatively low. There are places in the UK where property prices haven't risen in the last 10 years and are unlikely to do so going forward. If you're investing in property, no matter what the strategy, what you want to get is that Goldilocks zone. Areas of the country where capital values aren't too high, so you're not going for Kensington or something like that, but they're not too low either, and where there is decent rental property demand. Now, back when I started investing in property, vanilla buy-to-let was very, very easy. First of all, way back then, you only needed a 15% deposit on a buy-to-let mortgage. We did not have additional stamp duty rates on investment properties. So you could pretty much buy a flat or a house pretty much anywhere in the country and rent it out on day one without doing any refurb or anything like that, and make positive cash flow. By positive cash flow, of course, I mean that once you've covered your mortgage and other outgoings, your rental income gives you a surplus, a profit. The problem today, of course, is that in recent years, mortgage interest rates have gone up significantly. That means if I'm buying a house and I'm putting 25% deposit into the property, and I'm paying 3% additional stamp duty charge, I'm tying up quite a bit of capital in that investment property. But meanwhile, my monthly positive cash flow ain't that much, because my largest expense, being mortgage interest, has nearly or more than doubled in the last 18 months. And when you're actually looking at a buy-to-let investment, what you're actually looking at is, well, how much cash am I tying up in that property? How much cash do I have to leave in that investment? And what is the positive cash flow that I'm making per year on that property? I divide one by the other and I get my return on cash that I have invested in the deal. And quite frankly, as we go into 2024, those returns are absolutely rubbish, and you can do better things with your cash than deploy it in a vanilla buy-to-let. Before I get on to the second strategy that's dead in the water in 2024, if you're liking this video, smash that like button, show your appreciation. It really helps us out on YouTube. Also, subscribe to the channel, hit the bell icon so you're notified when we upload new videos, which pretty much is each and every week, 3 videos a week. So the second strategy that's completely dead in 2024 is rent to rent. Now, rent to rent worked a treat a few years ago, and there are still people out there teaching this as the way to get started today. And now let me explain how it worked in the years gone by and why it certainly ain't working going forward. So what you'd do is you would hunt for a property which you could rent from a landlord that just wanted a fixed monthly rent but didn't want too much hassle, shall we say. So you'd agree a fixed monthly rent and you'd rent the property on a long-term basis, maybe 3 or 5 years. And then what you'd do is you'd convert that property into a house in multiple occupation so that you can rent out individual rooms. Are you struggling to find your next commercial to residential conversion project? Well, over the next 2 years, virtually every UK bank branch will close. Banks are fabulous buildings in prime locations, and thanks to permitted development rights, they're really easy to convert to alternative uses under a light touch planning regime. My team have put together a list of over 500 UK bank branches which are poised for imminent closure. And for a limited period only, you can download this list absolutely free. Your next commercial property project is on this list, so download it now and enjoy the rest of the video. Now here's the thing, you always get more rent when you intensify the usage of that piece of real estate. So instead of renting it out as a single family let, you split it up into rooms, you rent it out as individual room lets, you will generate a higher rent roll on that property, you'll be able to pay off the property owner their fixed monthly rent, and after covering your expenses, you'll make a profit. And in yesteryear, that was a great strategy, particularly for those getting started in property, because it allowed you to profit from property without actually owning it. But of course, that doesn't work in 2024. And here's why. Well, firstly, of course, rents have gone up a lot. So if you had secured a deal to rent a property from a landlord for, say, £1,500 a month, then that landlord is looking for £1,900 a month today. Now, when you take the property from the landlord and split it up into individual rooms and rent them out individually, you become liable for things like council tax and also for utility bills. Now, utility bills have of course gone up quite a lot recently, and that is affecting your profitability. So you basically got a situation where the landlord you're renting from, well, their costs have gone up because of course they're paying a higher mortgage on their property. That landlord is demanding a higher fixed rent per month. Yes, your room rents have gone up a little, but it hasn't gone up enough to pay the landlord their fixed rent and cover the increased cost of providing utilities that we've experienced over the last year or so. So the trend I'm seeing among property investors is property investors who have taken rent-to-rent properties actually handing back the keys to the landlord because the profitability on those has gone down to nil. And here's the other thing. We're at a completely different stage in the property market cycle in 2024. We're seeing a recession. Property prices are going to dip a little bit. And recessions are where fortunes are made in real estate. You don't want to be renting a property off a landlord, renting it out as individual rooms and making a little markup. This is a time to secure real estate because it's a buyer's market out there. That means sellers are outnumbering buyers by nearly 1.6 times. Now's the time for picking up these assets and basically holding on to them, letting them out at a profit and waiting for the recession to turn into a boom, which it always does. And when the market dips a little bit, as it is doing right now, what you tend to see is older landlords, tired landlords selling up, also over-leveraged landlords who have just borrowed too much will be looking to sell up too. And there will be bargains to be had. Because remember, just because another landlord is not making a profit from a particular property, it doesn't mean that you can't. What it depends on is the price you pay for it. If you buy it at the right price and have the right rental strategy, then you can turn round another landlord's unprofitable deal into a profitable deal for you. So rent to rent won't work in 2024. The economics will give you a near to nil profit. And even if it did, I would argue that the best thing to do is buy stuff that you can own, cash flow positive, and hold until the recession turns to a boom. Tell me what you think about what I said in the comments below. Also smash that like button, helps us out on YouTube. Subscribe, hit the bell icon for a lot more content like this. The third strategy, which I think is a load of baloney for 2024, is deal sourcing or deal packaging. I did this video about a year back explaining what deal packaging, what deal sourcing actually is, and the myth versus the reality of following this strategy. But to keep it brief, deal sourcing is basically where you are a glorified estate agent. You find property deals for people who are time poor but cash rich, and you find these deals for people and you charge them a few percent as a deal sourcing fee. Now here's the thing, who are you going to source these property deals for in 2024? Very few people are out there looking to buy-to-let property with 100% cash funds. Most of these people you'll be sourcing for will be looking at getting a mortgage. And as I explained earlier, it's very hard to make vanilla buy-to-let stack up on a buy-to-let mortgage because mortgage rates have increased so much. So what sorts of deals will you be sourcing for people? Well, if you're going to do rentals, it's got to be something where you intensify the usage of that real estate, which means some kind of house in multiple occupation strategy. You can be doing sourcing for people like developers, where you're looking at commercial plots that can be redeveloped into residential units, or plots of land which you identify where there's planning uplift potential by building some houses or flats on them. So there are all sorts of things you can source. But here's the thing that I don't quite get. To be successful in deal sourcing, you have to develop quite a comprehensive skill set. You have to become an expert in marketing. You have to market yourself as being out there looking for off-market deal opportunities. The second skill set you have to develop is that of deal analysis. You have to quickly be able to evaluate a deal, spot the opportunity, spot the profit potential of a given opportunity quickly. The third skill you need is negotiation. To be able to negotiate with the vendor the price, the timing, and the structure of the deal such that it's a win-win for all parties. And that's quite a few skills that you need to develop. And quite frankly, if you're skilled enough to build your skill set in those three areas, you might as well develop the fourth skill set, which is how to fund the deal. When you develop that fourth skill set, then you can buy the property yourself. You don't need to source it for other people. The reality is that most sourcers do both. They buy properties for themselves that they want to hold on or develop, and they also sell off the stuff that they don't want to other parties. The reality is the deals that you don't want to do yourself aren't really worth doing. So why would someone else want to do them? Even if they're time poor and don't have the time or resources or skill set to find the slam dunk, great deal of the century type of deals, they still don't want to tie up money, particularly in this market, in a deal which ain't going anywhere soon. You see, in a rising market, in a booming market, someone who hasn't got much time on their hands, who've got a little bit of cash to spare, will invest in a deal which might not be that great, which is okay. Because in a booming market, of course, you own the property and within a couple of years you're doing quite well. But that opportunity simply isn't there in a market like we're in right now and the market that we're going to be in for the next few years. So that's why those sort of buyers tend to vaporize. So what you need to do is market yourself so that you get those off-market deal of the century opportunities. Get skilled in analyzing those deals so you know which ones to pounce on. Get skilled in negotiating those deals so you can take advantage of the fact that it's a buyer's market to get the right price and the right deal structure. And, of course, fund those deals. And here is the big secret in property. You can fund any deal out there if it's good enough. If there's enough margin in the deal, then you will always be able to find the funds to do the deal. Now, you guys may have seen me on the hit Sky TV show Property Elevator. We'll be shooting season 7 of that show now, and it's basically a show a bit like Dragon's Den, where people come along and they've got a deal and they pitch it to angel investors. They don't necessarily have the funds to invest in that deal, but what they do is have the deal, and they've either negotiated or secured that deal with the vendor. Now, generally speaking, if there is at least 35% margin in that deal, and you as an entrepreneur are investable, likable, and all of that sort of jazz, you will get funding for it. So to summarize then, 2024 is a completely different market to the years gone by. There's a time and place for every property investing strategy. The ones you do not want to touch in 2024 are vanilla buy-to-let, rent-to-rent, and deal sourcing / packaging. That's it for this video. Tell me what you think in the comments below, and see you guys next time. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street, we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.